by the amount of people who are out there buying the houses that really aren't on the market as much as people would like. You know, when real estate starts to become scarce, people decide to start investing in it, which is good and will continue to help drive Seattle's real estate market. Dave Smith joins us, who's completed over 100 transactions in his 10 years as a commercial real estate agent and broker, and his specialties include investment real estate, land sales, mixed use, and multifamily. Welcome, Dave. How are you?
Doing great. Thanks for having me here.
It's our pleasure. And, so let's talk a little bit about the multifamily real estate business and what's going on around here.
Well, the multifamily market is back, and it's strong. All I do is personally sell apartment buildings, and as a real estate agent, that is all I do. So I've got a very good pulse on the apartment market right now, and just like the housing market that went kind of in the tank, so did our commercial market in investing in rental properties in 2010. Not much happened, but now the market is back and very active.
And so who's investing in a lot of the multifamily stuff? Who's buying up all the Seattle real estate?
You know, it's really a wide range of buyers out there, whether you're dealing with something small like a fourplex, maybe located in Bellevue, to maybe a 10, 15-unit classic brick building on Capitol Hill, to a large garden-style apartment complex located maybe North Seattle or somewhere thereabouts. It is a really wide variety of buyers. On the smaller level, you got a lot of ma and pa's who invest in real estate, single owners. It goes up into small partnerships, syndications, to a larger level of dealing with institutional buyers. But typically I think you'll find that the $1 million type of sale, $2 million type of sale, a lot of times is very somebody here in our backyard is buying that building.
I've heard there's a lot of money coming from overseas. Is that true?
Oh, most definitely. There's a lot of money coming from overseas buying real estate right now. That kind of goes on and off, but there is plenty of money right here in Seattle buying our local real estate as well.
Well, that's good. I mean, right? And so it sounds a little bit like, although there is outside influence, a lot of Seattle real estate is staying in Seattle, for lack of a better term.
Yeah, I mean, I think there's a little bit of a mix. I mean, you always hear about the California buyers, and some people joke saying there's just truckloads of money coming here to Seattle, and there is really a lot of truth to that. But people's money's been sitting on the fence; they haven't been doing anything with it. Right now, there's reasons to do stuff with your money when it comes to buying apartment buildings or investment real estate, rental properties per se.
So, when you say the market is active, what does that mean exactly?
Well, in 2010, our commercial transactions in King County or the Tri-County went from essentially dropped about 80%, 75%. So literally we had just a stagnant market where really transactions didn't occur, very little. We were starving. Right now, banks are lending again. Interest rates are attractive. When it comes to apartment buildings, rents are on the increase, vacancies are low. People have a reason to buy when the news is good, which obviously yields to sellers also saying, hey, I can get my price right now. So let's go ahead and put it on the market and see what we can get.
So what do you see what are the big benefits then of jumping into or investing in multifamily or single residences investments right now?
Yeah, I really think that investing in real estate is really one of your best retirement vehicles, whether it's on a small or large scale. I think there's a lot more people that should be doing that, be able to kind of have a tangible asset that you can go see, kick the tires, know what it's doing, is just in itself just a real big benefit when it comes to looking and evaluating sort of your overall financial strength and where you're at in your retirement, what you're investing in.
I know from like a financing side right now with rates so low, it can be a great place to leverage your money. It's even cash flow properties where I know in 2005, 2006, it was all speculation. So, it seems much safer now than it was.
Yeah, safer. Oh, I don't know, but rates are definitely fantastic, and we could get ourselves into another trap going forward, where you leverage back into real estate, borrow money on the cheap, and whether you have a 5 or a 10-year loan, you might be in trouble. But I think that I'm ultimately pretty bullish and optimistic. But right now, you've got money that you can buy at a historical low. You can buy into investment real estate, borrow money. It might not be quite as cheap as single family, but it's very cheap. I mean, we're talking money that's in the 4% interest range, sometimes cheaper.
So what then? Oh, so you can get the money for cheap to buy a place. Is the financial commitment in some of these bigger properties? I mean, I guess there's a lot of different ways you can get involved.
There really is. I mean, the financial commitment that you have investing in real estate, it's various. It just depends on the asset that you're buying, whether you're buying something like a triplex or fourplex on a very smaller level or a single family, being able to leverage into it a little better versus, typically you got to look at 5 units and greater, falls under a commercial financing. Your financial commitment with doing that means that you have to get financing that typically requires a larger down payment. Banks are going to look at debt coverage ratios and figuring out how much they can lend you. But ballpark, you go and buy an apartment building, 5 units or greater again, you're typically looking at roughly 30% down. If you're buying an apartment building that's on a Capitol Hill, Queen Anne, that's selling at a very aggressive price, you may be putting a larger down payment. If you're buying a property that is in a market that's not quite as attractive, it may be selling at a higher cap rate, which means that you might be able to leverage into it and have a little bit better cash flow. Consequently, you're not going to be out of pocket as much, but you can still probably plan to put a minimum of 25% down when it comes to investing in apartment buildings.
Is that one of the biggest reasons, or I guess the biggest ways you can help determine which properties are going to be more successful for a buyer? I mean, I guess it has a lot to do with what their financial commitment can be up front. That's probably a big barrier to entry.
I've had a lot of people find a huge amount of success buying very small properties to large properties. I mean, there's people that have made a killing just owning rental homes. That's not something I sell, but I see it every day where people have made a lot of money in just investing in something. I think the key is figure out what you can afford, buy the best thing that your money will afford, whether that's location, quality, looking at the cash flow numbers on the property to figure out if you borrow a certain amount of money, is this the building that's going to be able to produce the most amount of cash flow for me? And kind of hang on tight, and let the market do its thing over a long period of time.
So it's certainly, you got to take the emotion out of it, don't you? And look at the numbers.
Yeah, you got to look at the numbers, but still, curb appeal is important, whether you're buying a house or a commercial property. But you are going to see a different emotional connection to investing in an apartment building where somebody's going to be looking at the numbers on that building, making sure if somebody's going to put $500,000 down into an investment real estate property, they're going to be wise in that decision, and they're going to crunch the numbers, and they're going to figure out at the end of the day, if I invest $500,000 or less or more, they're going to figure out, what do I get at the end of the day once I've paid the expenses and collected the rents?
Well, Dave, it sounds like there's opportunity now, and really understanding what you want to get yourself into is a big part of that.
Yeah, no, there really is a great opportunity out there. I mean, the biggest opportunity for buyers right now, again, is being able to, the banks are open, they're lending, getting the attractive interest rates. You got to go out there, do some homework, like anything that you buy, understand what you're getting into, be prepared to write your offer. You got to be aggressive. It's not that much differently. The market's not much different in buying apartment buildings than it is buying single-family houses. Anything that's nice, there's going to be somebody right on your heels to buy it as well. But there are opportunities across the board, though.
Well, Dave, thanks so much for joining us. We do have to go to break. That's Dave Smith, Paragon Real Estate Advisors. When we come back, everybody's coming back to the mic. We're going to discuss a little bit more about the real estate information and news that's important to you. We'll be right back after this break. You're listening to Brashenomics.
Dreaming of a custom closet? Organized Spaces can design and install it with our smart and creative solutions. A complimentary in-home consultation starts the process that may include a visit to the Organized Spaces showroom in Kirkland, a 3D drawing, and always includes our dedication to focusing on you and how you use your space. We are the preferred vendor of many luxury home builders and interior designers. Please visit our website at organizedspaces.com for more information, or call 425-823-4847. That's 425-823-4847.
Why should you use Property Inspector LLC to inspect your new home? Because our home inspectors are so thorough in their evaluation of the property you're considering purchasing. We mean it when we say we won't let you get stuck buying a money pit. Property Inspector LLC has protected more than 3,500 home buyers in the Northwest because they're one of the best in the business. Don't get stuck with a bunch of unexpected post-closing expenses. Dial 425-985-3289 now. That's 425-985-3289 to schedule your home inspection today. Property Inspector LLC, located in the greater Seattle area and East Side.
Negativity and fear, two staples of talk radio. Well, we figured we'd try something different. Alternative Talk 1150.
Welcome back. Here with some top real estate advisors here in the city. Brian Lovelace, Rebecca Carlson, Dave Smith. Guys, you guys were working with the clients, obviously. It's part of the business. What do you see as some of the most interesting news that people are paying attention to?
There's no question that inventory shortages and pricing and the recent appreciation is tops on everybody's radar. After so many years of negative news, it's really refreshing. I know for those of us in the industry and most of my clients feel really encouraged at the, essentially the rebounding of the market locally.
I'd say I get a lot of sellers who are still thinking, can I really sell my house and make money now? Really? There is this disbelief, and the market has actually shifted for some sellers. Now, granted, those who bought in 2007 probably are not going to be able to make any money, but there's so many homeowners in the area that have been in their house for 10 plus years. It really is a good time to be a seller. Yeah,
it almost seems that it'll be interesting to see when that number comes all the way back, though, to 2007, because at the pace it seems to be going right now, we could almost get there.
Well, I mean, for sellers, yes, let's hope, but, it's hard to know.
Most economists are predicting somewhere between 6 and 10% annual appreciation. We're still probably a few years from the very height again. Double-digit appreciation is, I think, tough on any marketplace. It prices too many of the local people out. Mm-hmm. Employment raises and income in general just can't keep pace with that kind of inflation. So, I think it's very healthy to have a historic 5 to 7% appreciation rate. I think it's good for everybody.
Do you see that happening in the news? Of course, you're going to see the headlines like Seattle Times with their, and they pull out the 10.2% year over year, right? They're always going to put those big numbers in. That causes both demand and fear, I think, on all levels, doesn't it?
The one thing about the newspaper, and this is really true, and a lot of people don't understand.